how to backtest trading ideas. So at the time of this recording, I actually do not have a full in-depth video guide explaining the entire backtesting process step by step. So what I'm going to have to do for the sake of this video is I'm just going to have to speed run it, and I'm just going to have to go with the flow. Okay, so when we're talking about ideas, these ideas can be batched into two different categories. So either we're testing whether an idea can improve our existing trading strategy, or we're testing if this idea by itself can work as a completely new trading strategy. Okay, example of an idea to improve an existing system would look something like, if I was to only take trades when the average volume is above a certain number, how would that impact my performance, right? So then we could, and how that would look like is we're going to compare the results of all of our normal trades that we've taken, which we can just copy paste from our trading journal. And we're going to filter all of our trades for, okay, which are the ones in this journal which meet this very specific criteria. So only trade when when the volume is above, let's say 100K per 1 minute. And then we compare the results. And then when we compare the results, we will notice that, I'm just going to quickly draw this 1 second. We will notice that our idea either can have a huge impact on our performance in a good way, or it can have a huge performance on our performance in a bad way, right? Or everything else in the middle, which is very little, very little, if not unnoticeable impact on our performance. So we have 0 in the middle. This is just talking about how much of an impact are we talking about for this particular idea that we're testing. Now, what you will find is if you test a bajillion ideas, let's say 1 million ideas, you will notice that the distribution curve of how much impact your ideas will have, it will look like a bell curve. So it will look something like this. What this basically means is that most of your ideas, majority, okay, most of your ideas will have little to no impact on your trading performance. And then very few ideas are going to have an insanely big impact to your performance in a good way. As in, if you followed through with this idea, it would probably make you a lot more money. Alternatively, if you follow through with this other idea, it would lose you a whole bunch of money, right? So we have these two extremes. That, like, the fact that they are an extreme, it's rare to find something that will have an extremely positive or an extremely negative impact on your trading performance. And it's very easy to find stuff which will have very little, if not no impact on your performance at all. So that I'm just getting that out of the way because we have to immediately accept the harsh reality that most of the ideas that we test probably will not lead somewhere. Only very few of them. Like if X% of our ideas will lead to this, then just get used to the fact that X is probably going to be a small number and we might have to test like 100 things before we actually land on something good. Like, I just have to get that out of the way now. Look, this is the most critical thing to understand before you go into the whole backtesting rabbit hole. Okay, now that we got that out of the way, again, just to keep things simple, I'm just going to focus on this. So improving an existing strategy. So how the framework will look like is, if I did X instead of doing Y, then how does that impact my performance? Right? So this is the structure. If I did X instead of Y, how different would my performance look like? Or how much impact would this idea actually have on my performance? So you can do this in a really simple spreadsheet. Now I've got here just an example of an idea. I don't think I need to share the the link to this because it's really, really basic and straightforward. But basically, this is how it looks like. So first, you want to throw in as many trades from your current way of trading. So this is just your own trades from your trading journal. You can just copy paste it over, or you can copy paste your backtest results of an existing strategy, okay, onto here. So here's the trade number, the trade screenshot, and your old result. You can either measure your results in units of R or in units of USD. Just to keep things simple, I'm just going to pretend that it's units of US dollars, right? So everything in these three columns is just everything from my current trading strategy. Now let's pretend that I'm testing the idea. If I was to, let's say my normal strategy takes profit at roughly 1R, and I want to ask the question, okay, if I took profit at 2R instead, how would my performance look like? Okay, so we have here, we have all of these trades, they would be winners, right? And these two would be losers. So minus is, okay, I've lost 10. This is win. Okay, so the new result, here's where I'm testing the idea. So on these first two trades, I would have won 20 because on those two trades, maybe price would have actually extended beyond the 1R point and hit the 2R. Cool. On these two other trades, it actually did not make it all the way to 2R. Maybe it went to like 1.5, 1.6, and then turned around and would have stopped me out. Thus, all of these minus 10s. Now, once I've filled out what would my new result look like if I was to do X instead of Y, I just simply compare the two results. Or I compare the stats of my normal way of trading. So here's my normal way of trading. I'm just going to delete all of this 1 second. Delete. Okay, so here's my normal way of trading. I would have had 6 wins, 4 losses, so 60% win rate, and my total profit was $20. Therefore, my average EV per trade is $2. Now, with this new way of trading, with this idea, like sure, on a couple of trades, I would have won more. Like, yes, in these isolated instances, in these one-offs, I actually would have made double the amount of profit. But overall, I actually would be losing money because there are a few instances here where price just never extended to that 2R point. So I would have lost money. And therefore, by looking at these two results, we can say, well, okay, if I did X instead of Y, I would have got a worse result. Therefore, I probably should not go for wider targets, right? Because it literally would make me lose more. Okay, so some things to keep in mind. The more sample size you have, the more reliable this data is, right? Because the lower the sample size, the less reliable it is. So the more sample size you have and the more reliable the data is, the more you can use that data to make a judgment call on whether or not you should actually make a change to your system. This is like an entire video, like this can be an entire video in of itself. Like I could ramble on this topic for quite a while. There's a bunch of things that you could potentially like think about. But basically we want to, before we pull the trigger and say, yes, I'm going to make a change to my system, there's two things to keep in mind. So the first thing to keep in mind is what is the sample size that we're working with? And ideally, I would go for 30 minimum. So like at least collect data on 30 trades before you make some kind of call and say, okay, fine, I'm going to make a big change to the way that I trade. I'm going to change the way that I take profit. At least, you're going to need at least 30 trades before you make a call like that. 30 is like the absolute bare minimum, by the way. Because like, the thing is, randomness and luck, they play a role. They play a big role in trading, right? So when we're working with only 30 trades, it could just be that this was an unlucky streak, right? So, and that could be heavily impacting the statistics here. But as you draw the numbers out, like as we go into bigger and bigger territories, bigger sample size, this draws out like the true statistics start revealing themselves a little bit closer. As in, the bigger the sample size you have, your statistics will start to converge and move closer to what the actual win rate of that particular idea is. Hopefully that makes sense. So yeah, the first thing is the bigger the sample size, the more reliable the data. And the other thing is the difference in P&L between these two. This also is quite an important thing to keep in mind. So for example, let's pretend that the win rate on this is 58% and the win rate on this is 59%. This doesn't mean that, okay, we need to jump and switch over to this one because there is a 1% lift in the win rate. We went from 58 to 59. So awesome, let's switch over to this. It's like, not necessarily, because this could just be variance. It could just be luck. Therefore, probably not necessary to switch over, right? But if this was like 80% and this was 58, and we're working with a 30 sample size, right? Then we're a little bit more justified to be like, wow, okay, well, if this has an 80% win rate, all right, we can investigate this a little bit further and see whether or not it's worth switching. So the first thing, we want big sample size. And the second thing is we're looking for like things which are statistically skewed. So what I mean is we really want to see like how much of an impact does this thing really have, and ideally we want it to have a big impact, because the bigger, like when we're working with really small increments, it could have just been lucky. So yeah, I'm gonna actually wrap up this question here, because I think if I keep going, I'm just gonna keep rambling nonstop. But yeah, in the future, I will have like a really in-depth video, and I'm also gonna do case studies where I properly backtest an idea and then I review it. I'll go through everything one step at a time, and then I'll also make the verdict on the call, like, oh, is this idea worth pursuing? Yes or no. But yeah, hopefully this was just like a mini crash course on how to do it. This is how I would approach it for just testing the efficacy of something that is existing. Actually, you know what? I'll just quickly ramble with the testing if this new idea works too. I'll just quickly ramble on it. I'll quickly ramble on it. So basically, it's the exact same process. We just want to collect the same data. Like, how many times did this thing happen? How many times did the idea win? How many times did the idea lose? What's the success rate or win rate of the idea? And what's the total profit if I was to go and trade it, right? And we can even go and plot the equity curve of it as well. And you can just do this on Excel. Easy peasy. So this is how your bankroll would look like. Oh, actually, no. Yeah, this is how your bankroll would look like if you were to trade this strategy. So yeah, that's all you got to do. You're pulling the data from somewhere. So we're opening TradingView and we're testing how many times did this idea happen in the past, n units of time. So if I'm testing, if I got long after a bearish engulfing candle on BTC on the daily time frame and held a position for 1 day, what would the results be? So here you just pull up TradingView, find every single time that there was a bearish engulfing candle. I'll say, and caveat, from 1st January 2017 until today. There we go. Because we want to select a start and an end date for the backtest. So yeah, if I got long after a bearish engulfing candle on Bitcoin on the daily time frame and held the position for 1 day, what would the results be from 1st of January 1st January 2017 until today? So we go into TradingView, we flag every single time, or we put a little mark every single time there was a bearish engulfing candle, and then we measure what is the return over the next candle. So we might have something like this. And instead of screenshot, we're only going to be looking at the results. And it might look something like 5%, 2%, minus 2%, 3%, etc., 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 right? Etc., etc. And then from there, we just look at, okay, how many bearish engulfing candles were there on Bitcoin from 1st of January 2017? And it's like, okay, well, there were 22 of them. Okay, cool. If I was to get long, blindly long, and I hold the position for 1 day, what would my results look like? And it says here, well, I would have had, what do we have here? Oh, okay, I've messed up the formulas, but the point is, you want to count how many times did it happen? How many wins would I have got? How many losses would I have got? What's the win rate? What is my total P&L? And if I was to do this on average, like what does my average trade look like? And then based on this, we have our answer. And then from there, we'll be able to see, is this actually worth pursuing? Yes or no. But yeah, cool. I'm going to wrap up the video there. I hope that was helpful. And yeah, I will absolutely cover this like super duper in depth a little bit later on in the near, hopefully not too distant future. All right. Thanks for watching.